Hello, everyone, and welcome to a new edition of Merrill's Monday Market Madness. Today, I am joined with our special co-host agent on the Big Helper Group, Chris Ulrich, and we are going to be breaking down what is happening in the housing market in the Phoenix area, and really just kind of highlighting how this is the best opportunity for buyers that we have seen in a decade. And so there's just some really interesting things happening in the market right now. So I'm going to start, as always, by looking at our month's supply of inventory number. So right now, active on the market, there are 18,393 homes. 8,266 of them are pending. 5,777. I know that's kind of a fun number. Maybe someone should go buy a lottery ticket or something. Right. Homes have closed in the past 30 days, giving us a month's supply of inventory of 3.18. It is by far the highest month supply of inventory we've had in a long time. Last week's episode, if you watched that, we were at a 3.10. So now we're at 3.18. So it's ticked up just a tiny bit. But last week was the first time we'd ever been over 3. And now we're all the way up, up to 3.18. So what that basically means is inventory continues to climb. The number of homes active available for buyers to choose from is getting to be more every single day. Every day there's 100 more homes than there were yesterday. Yeah. Combine that with the fact that we only saw 5,700 homes sell in our MLS in the past 30 days. Normally in this time of year, we would see around 8,000 or 9,000 homes closing in a 30-day period. So demand is lower than normal. Supply is still relatively low compared to historical, but it's climbing, and it's climbing fast. So in past episodes, I've talked about how a balanced market would have a 4-month supply of inventory, and a buyer's market would need to have like 5 or 6 months supply of inventory. But what's happened here is it's shifted so fast. Buyers have all the momentum, and because it has just flopped so fast, even though we're not at a 5-month supply of inventory yet, the market is basically acting like we are in a buyer's market.
And it feels like it.
Yeah, it definitely feels like we're in a buyer's market. Yeah. So that is where we're at with month supply of inventory.
Yeah, and so right now we're seeing our average days on market right around 66 days, which is just crazy to know that homes on average are taking 66 days, and it's probably even farther than that before they even get their first offer accepted contract, which, rewind back a few months ago, that number was like 5 days. So it's just crazy the shift that it's taken. And also with that, the average days for a closed listing is at 34 days right now. So what that means is it's taking on average 34 days until the home goes under contract. That number we know is going to go up just because the average days for the active listings is so high that it has to raise up to meet that one. So, we know what we're feeling in this, that these numbers are continually rising, and if you're a buyer, that's good news, because that gives you a lot more power. If you're a seller, it's not as much, but with that, we're seeing a listing success rate currently at right around 23%, which means, go ahead.
Sorry, 72%. Listing success. Sorry. 23% is what.
Yeah, sorry, I was reading it backwards.
Yeah,
72.3% is where we're at. So, for every 100 homes that come on the market, 72 will close, and then 27 won't. So that kind of means with that, we're also seeing a massive amount of cancellations. We're at the highest number of cancellations since 2014. Which is just kind of crazy to see that before we weren't having any homes cancel, and now we're at such a massive number. And then, with all of those kind of bad news for sellers, good news for buyers, we are seeing 4,000 homes, just a little over 4,000 homes on the MLS have reduced their price. So what that's showing is, before we only had 4,000 homes on the MLS, and now a quarter of all the homes that are on the MLS have now reduced their price. And honestly, the number should be higher because there are a lot of homes that are still setting out there that need to be reduced, that have been on the market 50, 60 days now. Any of the ones that are on the market for 66 days probably should have a reduction in price.
Yeah. Well, and to clarify that just a little bit, 4,000 of the 18,000 active listings reduced their price last week. There might be, of the 18,000 active listings, probably more than, half of them have had a price reduction at one point, but 4,000 of them did a price reduction just last week.
Yeah.
So we're seeing, almost a fourth of all the homes that are on the market right now are reducing their price, and they should probably be higher than that.
Right. It definitely should be.
Yeah. There's definitely some homes out there that are, there's a lot of sellers who were hoping to catch the tail end of it. And that's why we tell you can't time the market, right? And we're basically past the tail end of it, and the market is now reducing. If you watched our show last week, the average sales price in July was almost $50,000 lower than it was in June. So prices have already started to come down. But there's some good news in this for sellers, and that is that the pace at which prices are falling seems to have slowed down. We were down 50,000. Now we're only down about 40,000 over, you take the average sales price over the last 30 days compared to the 60 days before that. So prices are falling, but I don't know how much farther they're going to fall. So if you're trying to time the market, again, look at how many sellers right now thought they were going to time the market. You can't time the market. You just need to buy or sell a house when you need to buy or sell a house, and the market is what the market is. Just to end on a couple of points here, the average sold to list price ratio is currently at 98.5%, which basically means that if a seller is asking $100,000 on their house, on average, they're selling it for $98,500, which is pretty good. That makes it look like, there's really not a whole lot of negotiation room there. But the reality is that average sales to list price ratio is based on their current list price at the time the home went under contract, not their original list price. So it's possible that they had originally listed the home for, let's just say they originally listed it for $110,000, right, and then they didn't get any offers. Then they lowered it for $110,000 and then sold it for $98,500, right? So that's that number is, the sales to list price ratio, 98.5%, and that number will also probably continue to fall, because what we're seeing is buyers have an awful lot of negotiating power right now, because many sellers, not all sellers, some sellers are like, look, I don't really need to sell, but if you're a seller who needs to sell, there's a lot of sellers out there right now who are, I just hate to use this word, but they're desperate for an offer. And even showings, like they're desperate just to get someone to come show their house and provide feedback. And, because many homes aren't getting showings. We were looking at a report. We can kind of look at how many showings homes are getting. And I was running a report for, it was a listing that we had in Levine. And at that time, there were something like 40 active listings in their price range. And all 40 of those listings combined for roughly 30 showings over a week-long period. So on average, each home was getting 0.75 showings per week. Okay. And these were homes in the low 400,000s, by the way. So it's not like these were multi-million-dollar homes, right? These were the normal price range, and the homes still are not getting very many showings. So anyway, sold to list price ratio, 98.5%. Last quarter, it was 102%. So people were getting 2% above the asking price. Now we're getting 1.5% below. So that's a 3.5% swing. And again, I will look for that over the next 30 days to get even more dramatic. The sales to list price ratio will probably fall. My guess, somewhere close to 97% is where we're headed. And then lastly, I'm just going to touch on the number of pending listings. So right now we have 8,266 pending listings. Our high watermark, the highest number of pending listings that we had at any one given time this year was in late February. I think it was February 22nd, and there were 12,900 pendings. So we've seen the total number of pending listings has dropped by 36% from, the highest point that we were at. But if you're a seller and you're watching this and you're freaking out, like, we're still selling homes, right? There's still almost 6,000 homes sold in the past 30 days. You just need a different strategy, right? It used to be that we could look at the comps and then add 20,000 to it, and that's what your house would sell for. Like, what's the best comp? Add 20,000, and that's what your home will get for, and you'll still get multiple offers and go above that. Okay. Now you just got to look at it a little differently. You've got to say, okay, if I need to sell, I need to make sure that my home is absolutely the best value available in the area, right? So what, is there a house that is a better value for the money? Because there are still buyers buying. Now, if you're a buyer, I'm telling you, this is the best time we have seen in many years to buy a home. You can actually negotiate on the price again. Isn't it wonderful? You don't have to give up post-possession and your firstborn child and your boat and gift cards and all the shenanigans that we saw over the last couple of years. You might even be able to get some money off the price. More importantly, you can also get a seller oftentimes to contribute money towards your closing costs. We've been getting that a lot lately. Getting money from the seller for the closing costs is really beneficial because it reduces the money you need to bring to the table. If you're getting a loan, maybe you're putting 5% of the purchase price down. If the seller's covering your closing costs, then all you need is the down payment. You don't need any money outside of that. But what we're also doing sometimes is we're taking money from the seller and using it to buy down your rate. So average rates on Friday of last week hit about 5%, the lowest we've seen it in a couple of months, sorry. And you can take, let's say you got $10,000 from the seller, you can use that money, buy down your rate, and maybe you get it to a 4.5%. That suddenly
and that's
just
going to save you thousands,
tens of thousands.
Yeah.
If you kept that same loan for 30 years, it's going to save you tens of thousands of dollars over the life of the loan. So I do want to just address, by the way, I love answering you guys' questions about the market. So anytime, if you're sort of curious about anything, about the market in terms of, hey, what's going on in my neighborhood, or what's going on with prices, or what's going on with I gave an example last week of someone who wanted to know whether condos appreciated faster or slower than single family homes, and so I did the research and we did a report on it. So I love doing that kind of stuff. So if you're ever curious about something in the market, let us know. Now, we did just get a comment, and I'll just go ahead and answer this question right now. I'm trying to get it to show on the screen, but I'm having some difficulties. Okay, there we go. I can't sell until February of 2023. Do you think I'll be in trouble? And my answer to that is no, I don't think you'll be in trouble. First of all, you can't time the market. We've already kind of addressed that. You're just going to need to sell your home when you need to sell your home. But the reality is that I don't really believe that we're going to see home values drop much farther than they have already. We still, there's 18,000 active listings. Okay. To put that into perspective, right? There's how many people in the Phoenix metro area? Roughly 6 million. I don't know the exact count. Yeah. And the 2020 census was so jacked up. Yeah. Who even knows, because of COVID and all that stuff, but let's just call it 6 million people. Okay. And let's just say that 10% of those 6 million people are going to move in a given year. Of course, they're not all homeowners, but that's 600,000 people are going to move in an average year. Okay, let's assume half of them are homeowners. That's 300,000 homes that are going to sell in a given year. There's 18,000 active listings. Okay, so I just pulled those numbers out of I just sort of made them up. Yeah. I mean, I can try to get you more reliable data, but there are tons of buyers who still need to buy. There's still people who are having babies, getting divorces, dying. Like, there's just all these other reasons why people need to buy homes, sell homes, and so homes are still going to sell. And I don't believe we're going to see home values plummet. We've seen a little bit of a dip, probably because we had a little bit of over excitement. The inventory was so low and everyone got a little overexcited. Combine that with rates having risen, and that just, it got too unaffordable there for a moment. Now affordability is improving a little bit, and I expect that we'll see the market really, let's say, level out. Yeah. I don't think the value of your home is likely to rise between now and February of next year, but I don't think it's likely going to fall significantly. Maybe it falls in $10,000 or $20,000, and I don't mean to act like that's a pittance, but I don't think it's going to plummet much farther than it's at right now.
Can I add one more?
Yeah, please.
The good thing is February's 6 months away, so you have 6 months to prepare your house for the sale of it. So you've got 6 months to make it, a beautiful home that's desirable in the community. Like, it gives you enough time to clean up some stuff inside the house, and like right now we're seeing a lot of homes that are what everybody's kind of looking for are the ones that are really fast selling, and the ones that people are outdated or old, or the ones that people aren't really looking for are the ones that are setting a little bit longer too. So you have some time to prepare for the sale as well.
Yes. We are really seeing that. The beautiful, the pristine, the modern, the updated homes that are also priced appropriately are selling very fast. And the homes that need work, even when they're priced really, really low, are still not selling because we're just just, I don't know, the idea of sweat equity that has just gone down the drain.
Yeah, totally done.
Nobody wants
Yeah.
sweat equity anymore. They just want to move in ready house
Right.
so that they can start living their life.
Yeah, yeah.
And so yeah. And then we did just get another question as well. Is the rate of increase in inventory that's coming on the market slowing? I am actually going to share my screen with you to answer that question. I love getting these questions, by the way. Thank you guys so much. And if you're not watching this live, please, you still post your questions in the comments, and maybe we'll either just DM you or we will address them in another episode.
Yeah.
Yeah, exactly. So let me share my screen with you for this question and jump into, if you've watched any of my previous episodes, I track on a spreadsheet how many active listings we have and how many pending listings we have and how many listings that we've had closed over the past 30 days. Okay, and this blue line here is inventory. So no, I wouldn't say that it has slowed tremendously. It's still a pretty steep line. But it actually, I guess it's just not super easily visible on this graph.
Mm-hmm.
You know what though? I'm just realizing the date range on that graph is off because it only has us at 15,000 active listings, and we're at 18,000. Maybe I need to adjust the date range for what it's displaying there, because the numbers here are updated. Yeah. So if you look at this, we've got 18,425 here. And if we go back a week ago, there was, let's see, which day was Monday of last week? That was August 1st. There were 17,900. So basically we've seen inventory go up by about 500, roughly 500 more active listings on the market today as there were a week ago.
Yeah.
Okay.
And 2 weeks at the 25th was probably.
Yeah. And then if we go back 2 weeks, it was 17,200.
Yeah.
So over the past 2 weeks, we've gained 800 listings, right?
That's a lot.
Well, it is a lot, but there was a stretch there. And I just stopped sharing my screen here. There was a stretch there where we were actually seeing the total number of active listings was increasing by 1,000 listings a week. Wow. So now we've slowed down to 500, 400-ish active listings a week. So yes, the rate at which inventory is increasing is slowing. And I don't think that's necessarily because there's fewer sellers putting their home on the market. It's because almost 30%, and Chris talked about this a minute ago, almost 30% of all the homes that are coming on the market are not selling. And there's a lot of those are starting to fall off, cancel and expire. Think of it like this. If you're a seller who doesn't need to sell right now, you just sort of you were hoping to time the market. And so we sort of saw a spike of inventory of people like, oh, I heard the market's slowing down. We better hurry and sell our home before it's too late. But they don't really need to sell. Those homes are not selling. Yeah. Okay. So homes are still coming on the market, but a lot of stuff is also starting to come off the market. Yeah. And yes, I do think that the rate that inventory is climbing is gonna plateau. Yeah. Because it might not totally flatline, but it's gonna continue to increase at a slower pace because soon, if all you watch is the national media, you might not know yet, but soon people are going to realize that they already missed. If they were trying to time the market, they already missed the boat. Right. And a lot of those non-serious sellers are going to be taking their homes off the market.
And then we'll start to hit the normal yearly trends.
And then demand,
seasonal trends.
And then I think demand is going to pick up a little bit too. I mean, rates are improving. Once the Fed is happier with the inflation number, they will likely start to lower rates to try to help our country out of the recession. Right. And that'll improve things as well. So yeah, I think we've probably gone way too long today.
No, it's good.
But we had some questions, so I wanted to answer those. But thank you guys very much for watching, and I hope you enjoyed, and let us know if you have any questions. We look forward to your comments. Have a great day.
Thanks, guys.